Hey everyone, welcome back. Do I get the slides right? Yeah, I do get the slides right. Welcome back to our live trading session, well, more like news trading session, and today's going to be our NFP numbers. A very important NFP numbers for those that are new here. You guys were with me last month when we saw that whole mess went down with the NFP numbers, and this is probably why this is going to be important. Is it going to move the market? That is the question that I'm not quite sure I can answer right now. But yeah, let's take a look at some of the stuff here. And my name is Virenjara. Let's get this started for our month of September with our news trading session. All right, this is labor data, non-farm payroll, as well as the unemployment rate. Okay. All right, before we begin, as per usual, there's going to be a disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. Now, news trading involves risk due to high volatility. Market reactions to news can be very swift and unpredictable. Do I expect a lot of unpredictability today? Probably. Yeah, that's one thing that we might actually have to kind of factor in as well. All right, this could lead to high trading risk and delays in order executions. So be very attentive when determining the volume of your transactions and consider all possible risk factors. Good day, good evening, good afternoon, depending on where you guys are from. Okay, as per usual, I'm going to show you the promo code TW deposit bonus after this slide, and then you should already have access to the private Telegram channel. And you know, if you're not part of it or you didn't sign up for this webinar through Octa's website, then yeah, please contact customer service. They'll be more than happy to give you that access to the private Telegram channel. Okay, so this is a code Nonfarm 1025. Again, it is a one-time use code, right? And, you know, for years I thought it was kind of like a reusable code. It's not. It's a one-time use code. But yeah, when you feel like depositing into your Octa trading accounts, you can use the code Nonfarm2025 to get double deposit bonus. Some conditions if you want to kind of withdraw that bonus. But yeah, it expires on the 31st of December 2025. Politics projects rate cuts, all depending on today's data. I would probably say it really depends on the inflation data. But yeah, we'll discuss that as well. All right, just a little bit about myself. My name is Virenjara. I've been a full-time trader with over 20 years of experience. To be exact, it is actually 23 years full-time. I've also been a professional trading coach as well as technical analyst since 2007. And my expertise is in the Ichimoku Kinko Heel technique, which we have several videos of that Ichimoku Kinko Heel right here on this channel. If you're new and, you know, what is that? And you want to learn about it, check it out. You know, just do a search on Octa Broker's YouTube channel. You should be able to find that under, I believe it is under Japanese charting techniques. Okay. Okay. Well, a lot to cover, a lot of theories. No, not really a lot of theories. But yeah, for those that are new here and you guys want to catch up on a lot of stuff here, let's talk about the Bureau of Labor Statistics first. Okay, so who is the Bureau of Labor Statistics? This is the federal agency that collects this data about the U.S. economy as well as the labor market. No, they don't just collect the labor market. It is obviously the statistical body of the government themselves. So a lot of data is actually compiled by the BLS. In fact, if I go through, let me just get my phone here. You know, really, it's not really just limited to the BLS. Sorry, it's not just the CPI and whatnot, right? They do calculate productivity and costs in the economy. They do the Producers Price Index, which is going to be released on the 10th. And then we'll be trading the CPI numbers, which is a consumer price index, as well as real earnings. That's going to be on the 11th. And import prices, export prices, all of this are done by the Bureau of Labor Statistics, right? Including the labor numbers that we're going to be looking at tonight. So they do a lot of stuff here. And you know, the main focus is obviously the NFP numbers, right? So what is the NFP numbers? The NFP numbers are basically the number of people employed outside of agriculture, which is what we call the non-farm payroll, and that's what we call it NFP, right? Non-farm payrolls. And they also collect the unemployment rate numbers as well, which is something that we need to discuss today. But they do publish the calendar for the whole year. You can actually go to bls.gov if you want to and check out the calendars. You can actually add it up. You can actually add that calendar to your phone's calendar if you want to. If you have a Google Calendar, I don't know. I'm not an Apple user, but I would assume you should be able to do that because a lot more Americans are using Apple stuff, right? But yeah. So first Friday of every month, that's going to be our NFP numbers. That's going to be our labor data. And yeah, here we are, first Friday of the month, right? Several occasions, they do actually move it to the second week. I haven't seen them move it because of a public holiday at this point in time. Either they publish it a day earlier, like the 3rd of July, for example, right? 4th of July falls on Friday, they move it on 3rd of July. Other than that, typically we see March. That would be on the second Friday of March for February's numbers because February's are just a shorter month, right? And then CPI, PPI typically published the following week, sometimes 2 weeks. But yeah, most of the time it is actually the following week. Okay, so NFP. Let's talk about NFP numbers. The NFP that we're talking about tonight is actually the one that's collected by the BLS, right? The one that's actually released last Wednesday, that was by ADP, which is a private payroll company. So it's really more of a private sector rather than anything else. ADP NFP and the BLS NFP, they are two different data, okay? One doesn't give guidance to the other one because one is really more of a private sector. And if companies that doesn't use ADP system to distribute their payments, then they're not going to be part of that number in terms of that ADP payroll collection number. So is it accurate? Kind of makes sense to a certain degree that if we see that huge drop on the ADP like this Wednesday, it might have an impact, but it's not going to be a guarantee. So in terms of whether or not there's that correlation, I actually don't see that correlation at all. I think this was a question that was asked a couple of months back. And I say, look, the ADP NFP, think about it as a private sector, it's a private company, it's a company that distributes payment. Very different surveys done to collect this labor data, okay? The BLS NFP, that's the main focus. I don't think market reacts a lot to the ADP NFP, but we are going to be reacting more onto tonight's numbers. Okay, so NFP figures, it's obviously here. In terms of you learning what the NFP numbers is, if we see a number to above 200,000, then we consider that great, right? If we see a number below 200,000, then it's not really that great for the economy. Is that really true month to month though? No, okay? Because there's a lot of stuff that you have to factor in. You have to take a look at the context of the economy. You got to take a look at what Trump has done to the economy this year and the sentiment towards these numbers. You have to factor all that in. So it's not as black and white and say, oh, it's above 200,000, it's good. It's below 200,000, it's bad, right? If we keep getting numbers below 200,000, we have been getting numbers below 200,000 for a good. It's more than half a year of last year anyway. But yeah, so you gotta have to take a look at the context of the economy itself. Okay. So why is it very important? Because according to the Bureau of Labor Statistics, non-farm employee classifications, this actually accounts for approximately 80% of the US business sectors, contributing to the GDP. Now, there's actually a very particular breakdown for tonight's number. It is actually the healthcare payroll. If we see a huge drop under healthcare for the US economy for the data tonight. It is actually bad, regardless of what the NFE numbers is showing up, okay? The best assets obviously to trade this is anything that has to do with the US dollar. So dollar yen, dollar Swiss, sterling, euro, Aussie, New Zealand, dollar Canadian. Anything with the US dollar, it's in it, it's gonna be volatile. So that would include gold. Typically doesn't have a huge impact on oil, and if you're trading, equity futures, then yeah, they're gonna be impacted by the data that we're gonna be looking at tonight. Okay. All right. Second set of data is the unemployment rate, and I think this is actually the main focus for the FOMC. With the assumption by the market that the FOMC needs to move to cut interest rate this month, I'm not going to disagree. I think there's actually a high probability that the FOMC will be cutting in September. That will be on the 17th. But beyond that, I'm not really factoring in a lot of rate cuts from the FOMC. But we'll see what happens with the statement there. And one of the key triggers here is obviously the unemployment rate. And the unemployment rate, this is again a survey done by the BLS. It's a survey taken from 60,000 households in terms of sampling data. So they're going to be less volatile, right? The sampling data that's taken, it's going to be less volatile. With last month's NFE number, there was actually a lot of errors with the NFE numbers. And this is something that we have been anticipating ever since the start of this year, when Elon Musk and Trump cutting federal employees. This is one of the biggest risks, that the data collected by the BLS could actually be wrong. So there's not a lot of room for errors tonight, but we'll talk more about that in a minute, okay? So the unemployment rate, it's relatively stable. I don't see a lot of fluctuations there on the unemployment rate, and I think this is something that we already talked about on the outlook I published on Monday, that it is a much more stable number to take a look at. Is it a good representation of the whole US economy in terms of the labor market? I don't think 60,000 households is a good, it's a high enough number to survey whether or not the labor market is actually doing that great, but it is what it is. People react to it, but I think this rule needs to be changed sometimes very near in the future, right? Okay, to be part of the unemployment rate, that you need to be without a job. These people have to be actively looking for a job for the past 4 weeks, and they must be available to start a job if offered one. Now, obviously, there's 3 criteria that is required. How do you collect this? How do you know they're looking for a job? How do you offer them a job, right? There are going to be people that goes to the government and say, hey, I am unemployed. Could you please, help me out here? Those are your unemployment claims, right? And that's why every Thursday we have the weekly unemployment claims. And from that weekly unemployment claims, we can actually make a little bit of a projection into what the labor data is going to be. Okay, so it's not really abracadabra. We're just putting numbers out of nowhere. It is something that is actually within a certain range, okay? Because they have to be part of the system for them to be considered unemployed. So no illegal migrants, right? We might get foreign labor if they're legal in the States, then they could be sampled, but that's a completely different thing. All right. Third set of data is the US average hourly earnings. I don't think this is actually going to be playing into the market tonight. But the average hourly earnings is basically a report released monthly by the BLS as well, alongside the unemployment rate and the NFE numbers. It measures the average hourly earnings of workers in the US economy, and the data is collected through surveys of businesses across various industries. This sentence here is actually very important. The data is collected through surveys of businesses across various industries. Now, that's how the NFE is also collected, and that's why we have a lot of misreadings on the data, because the surveys can come in late. Okay, and that's why we have revisions every single month for last month's number. And I'll explain that in a minute. The difference here with the US average hourly earnings is that it actually calculates your overtime earnings, so it's much more concise. Now, does it mean anything in terms of, oh, the labor market is doing great? No, it doesn't have that kind of impact. It doesn't calculate how many people are actually employed, but what it does tell us is, are they getting paid more, right? Or are they getting paid less? So if we could get more people employed, but they're getting paid less, or we could get, low NFP numbers, very high unemployment rate, but people are actually getting a lot more in terms of their payment. So it's different. The US average hourly earnings, it's going to play more into the potential for inflation in the future, because if you are earning more, logically, as a human being, if I earn more, I would start to spend more. Very simple, right? Especially if you're living in more of a capitalist country, then yeah, it will be like that. Okay? Now, if people spend more and they earn more, it could actually mean that their standard of living is higher. And that's basically what inflation measures anyway. But yeah, it could push inflation prices up. So it's really more of an inflationary indicator rather than the stability or the well-being of the labor market. Okay. All right. Before I go on, I just want to show you a couple of strategies. Tonight we're actually going to be using the straddle strategy. Straddle strategy basically involves two pending orders, right? A buy stop and a sell stop above and below the current market price just before the NFP is released. That way you can potentially profit from a strong price movement in either direction. This is something that we actually have done. I believe it's right now 3 years that we have done this news trading session. And once one of these orders is actually triggered, you have to immediately cancel the other order to avoid being exposed to further market fluctuations. Can we do that all the time? Not all the time. I think we might actually be able to do some tonight. But if you want to know more, on the 9th, which is going to be on a Tuesday, we're going to be holding our theory and practice session for this kind of strategies with pending orders, okay? You can also trade NFP before the numbers release, but typically if we trade pre-NFP, we will be getting out of the positions right now, so number 1 doesn't matter at this point in time. Number 3 would be trading after the news is released. Immediately after the news is released, we could actually fade the initial move. So the strategy here basically involves waiting for the numbers to be released and then observe the initial market reaction, right? It might actually push in one direction, and within a minute or two, it could actually reverse or come back into the initial range, which happens very often with the NFP numbers, especially at a time where we need to focus a lot more on the revisions that is being done on the previous month's number. And we can also do post NFP trading, but let's skip that for now. I'll come back to this, because I want to talk about the numbers here tonight in a couple of scenarios. And if we take a look at the NFP numbers, the previous number was 73,000. Let me just get this right. The number before 73,000, let me just read it up to you, was 147,000, right? So 147,000, it was revised down. It revised down from 144,000 to, 147,000. It was revised down to 73,000, and that's not a good number at all. So we're stuck with 73,000, and consensus is for 75,000. So what are we anticipating? We're anticipating the NFP numbers to actually be stable at this lower range between 50,000 to 100,000. So if we get a number that's actually above 100,000, that is a super positive for the NFP. But what's really important is actually not this month's number. It is actually the previous month's number, okay, the 73,000. Reason being, if it was revised up, for example, instead of getting 73,000, they made an error and say, oh, you know what, the previous month we actually made a lot of revisions. We gotta tweak this up, we have to revise it up, and it might come back with 100 maybe 120,000 revision. And if the number comes in at 75,000, that would actually be really bad because the revision was revised up, and then the consensus or the actual number would actually be a lot lower than the previous month number. Even though right now we're looking at it at 73,000, if it goes up to 75, that's positive. But if last month's number was revised up, then it's not going to be good. And also, if it was revised down even lower, that would change the perspective as well. It would mean that if we get 75,000 and the previous number was revised down to, let's say, 12,000, that's actually a huge jump, a huge gain for the month of August, okay? And the unemployment rate, I would say this one here is going to be stable. I don't see crazy jump. I don't expect unemployment rate to all of a sudden hit 4.5 or 4.6%. So I would call it at about 4.2 to 4.3. That's about the range that is actually pretty stable. If we have a surprise of below 4%, that means the US labor market is going to be strong. Now, why is this data important? Because we are looking at August number. Does tariff have an impact into it? Tariff might have an impact into it, but you know, we might get layoff in the month of August, or we might get layoff in the month of September. But right now, if you have been keeping up with the news, this is irrelevant, right? Because most of Trump's tariffs are illegal anyway. And, you know, Trump is obviously appealing to the Supreme Court. And you know, the landscape has changed a little bit. So is it going to be more of a blip if anything goes wrong for August numbers or September's numbers? It might go off a little bit in terms of the data, but it really depends on how this tariff is actually going to impact future price movement. Okay. All right. Well, we'll talk more about this later on, but if you have any questions, we'll come back to that. All right. Let's take a look at the market here, and dollar Swiss, we'll skip that, instant skip. Euro US is already moving above the range at this point in time. I don't think we can actually create that trade. We have about 5 minutes to look at this and make a decision. But the Euro USD, you know, I would be okay with a little bit of a sell stop. We might actually have 2 sell stop here. So we'll do things differently. I would actually prefer to have 2 sell stop because these are going to be 2 trades that might be possible here. And in terms of whether or not there's actually a buy stop we can straddle, at this point in time, it doesn't really tell us that we can actually do that straddle there. But if we take a look at that level up there, it's going to be very close to about 1.17, right? It's about 1.17. We're finding a little bit of resistance. So any push beyond 1.1715, that would actually be a good buy stop for the euro. So euro, we actually have 3 positions being lined up. Remember, any one of these that got triggered, for example, the buy stop got triggered, cancel the sell stop. If the sell stop got triggered, then we cancel the buy stop. Simple as that. If we take a look at the sterling here, go on a 15-minute time frame, the range is actually pretty wide. We can do a little bit of a buy stop here above 1.35, right? I would be more than happy to have this at about 1.3510. A little bit more room here, and we do have that sell stop a little bit lower. And in terms of that sell stop, we are going to be looking at about 34.45. That's about it, right? Buy stop and sell stop for the sterling, just about there. Dollar yen, definitely not touching the dollar yen. We'll do this post data. The Aussie, I'll be skipping the Aussie as well. I don't think it's actually worth trading in terms of the range here. It's pretty bad. Gold, we'll trade after the data for gold. This one here has been a little bit unique, and well, I think last month we actually did straddle this one here, but I'm not liking having to short gold at this point in time, right? But we'll see. The 15 minutes does point for a weaker gold. But on the hourly time frame, I'm actually pretty neutral on gold, so I'll place a trade after the data is actually released. All right. So those are what we have. We have the euro, we have the sterling, the dollar Canadian, dollar Swiss. We will actually skip this. It has been moving. I don't think it's actually worth moving. Bitcoin definitely not something that I would actually be keen on trading based off this data, because technically it doesn't actually have a correlation or anything like that. The US 30, it's an hour before the market opens, right? So we'll probably not trade the US 30 pre-data. All right. So I'm just looking at this. Do you guys have any requests on any other currencies or any other thing to discuss about? But yeah, let's keep an eye out on the numbers. Again, what's really important right now, it's not the actual number itself. I really want to see if last month's number was actually revised. If there's any revision, we need to tackle that revision first, because that would actually be very important. It could actually flip the market back and forth depending on that revision and depending on that release that we have here. In terms of scenario, I don't think this is actually going to have a lot of impact into the market, I'll be honest with you. I think a lot of traders are just going to wait until the CPI numbers before, really adjusting the positions for what the FOMC is going to be doing. But again, look, I mean, that's my view on that. Can you explain the Nasdaq? Sure. What do you want to know about the Nasdaq? Do you want to trade this on the Nasdaq? I don't think this is actually straddle worthy, but you need to keep an eye out on this one here. If the hourly time frame breaks above that, then yeah, about 23,775. That would be the key resistance to watch out for. Sterling yen doesn't have a direct correlation, so we will trade the sterling yen after the news, not during the news. Okay? Because we need to see the reaction on the dollar yen itself, which is this one here, and right now it's not really ticking anywhere. If you have a sell on Nasdaq 100, then yeah, I mean, have your stop loss at that level. I think that would be it. It's really pushing it right now. You're really pushing it. What's your reasoning to short this? Something to consider. You can't just short it and then come to me and say like, hey, can you figure out what am I supposed to do? But yeah, we'll take a look at the edit. Data is going to get released in about 30 seconds, but we'll take a look at Nasdaq after the data is actually released. That's why you want to know your position. Do you have a stop loss? A very simple question, Faisal. Do you have a stop loss? If you don't have a stop loss, why are you opening your position? Do you even know your exit levels? Because that's not how you trade. That's actually very dangerous. If you tell me your stop loss, your take profit level, and you ask me, is it reasonable? Then I'll take a look at it like that, But you don't open a position and you come to me and ask for it. All right, it just shot up. Euro USD, I'm not getting filled. Something is actually off here. Data might actually be really bad, but let's close the Euro USD and the sterling here. All right, I want to see that data there. What's happening here? NFP number is actually 22,000. It's actually super bad. Previous month was revised up 79,000. This is actually very bad NFP numbers. But again, if we take a look at the unemployment rate, it's actually pretty stable at 4.3%. Yeah. Is it gonna last? Probably not. Did it spike? Yes, it does spike. All right, Faisal, you're probably lucky if you don't have a stop loss. If you still have that short position, I would really highly suggest you figure out where your stop loss is going to be on Nasdaq. I would say any push higher than 23,775, I wouldn't hold on to that short position. All right, Euro USD and sterling here is obviously shooting up. The dollar yen should be crashing right now, and this would actually have an impact on the euro yen as well as on the sterling yen. And the Aussie USD is spiking up. Still within reasons. It hasn't exceeded 66 cents. New Zealand USD, we still have a resistance up there. So not really significant enough. We're not really closing above 59. Gold, not progressing any higher or anything like that. Again, we just don't have that catalyst for that run right now. I'll wait for a bit on gold. We'll analyze. We'll take a look at the situation here. The question right now is, can we straddle this? No, obviously we already straddled this. Can we fade this? I don't think we can fade this. Whew. All right. So the NFP data is bad. It's really, really bad. We're getting 22,000. And previous month was revised up from 73,000 to 79,000. So we're getting an extra bad news here about 6,000 in extra. At 22,000 it says too low. So let me see if I can get the breakdown on the NFE numbers. All right, here's what we are looking at. And let me just pull it up here. So if you click on this, if you go to trading economics, obviously, you can actually look at the breakdown. But what I want to focus on is actually the United States healthcare payrolls. If we take a look at the payrolls here, the healthcare payrolls, it is actually not that bad, right? It's last at 55.4. Previously is at 37,000. We actually see this one goes up. So healthcare is actually still good. So not really super negative or anything like that. But initial market reaction is it is what it is. I don't think we can fade this. The number is just so bad. People are just going to pile in on this. They're just going to lean on this and say, all right, Fed, you got to cut interest rates and stuff like that. So I think for now, for today, for the next 2 hours, we might actually see this weaken a little bit. The stock market, as you can see here with the Nasdaq, this is already pushing up. So I don't know about your position, Faisal, but if you have that stop loss, I think you should already be out right now. You shouldn't be shorting a position like that without understanding what your risk is, okay? All right. Yeah, as I said, the unemployment rate, it is actually pretty stable. I have zero problems with that. I mean, if the unemployment rate is actually stable at that particular price, at 4.3%, 4.2, 4.3, I don't actually have a huge problem on that. Nasdaq is likely going to push higher, in all honesty with you guys here, because right now the anticipation is that, oh, the number is going to be so bad. The unemployment rate has also gone up a little bit, and the NFE is really, really bad. This could actually push risk sentiment back into the market, because right now, market are not looking at this and say, oh, that's bad for the US economy. They don't think that way. They're looking at it and say, this is bad. You know, JP, you have to start cutting interest rates. And that's going to put equities up. That's going to give risk sentiment a positive boost in the market. And that's probably why we're looking at that run at Nasdaq. We're likely going to be looking at that run on the US 30, hopefully, tonight. But Nasdaq and the S&P 500 is already up right now as it is. So Faisal, if you don't have or you're still holding on to your position, I would say please be mindful. I'm not going to give you personal advice. Just keep this in mind. But I'm just saying, you know, risk positive could be risk sentiment could be positive because this number is actually bad, and you know the anticipation for that rate cut from the FOMC, backed by this data, will likely push riskier assets up, including the equities futures. Okay. All right, let's take a look at the positions or what we have here right now. The Euro USD, this is still getting up higher. And we go on to the small time frame. I just want to see what was the potential here. I think we can actually push a little bit higher on this one here. Fibs, let's take a look at the Fibs. What cycles do we have? What Fibs should we do? Right now, I'm probably leaning towards this one here, but that's not so clear on the hourly time frame. I have to go to the 4-hourly time frame to kind of get that. This would actually be that. So if you make that adjustments, that would be this. But yeah, we are already, you know, testing beyond 1%. I think this can actually go a little bit higher, 1.1770, 1.1775. I think that would actually push to that level there. On the euro, matching it up with the pivots that we have here, our 1 weekly is at 1.1750. That's currently capping for the progress on the euro. Now, has my view changed on the euro? No, because at this point in time, we don't have a daily close above that. And if we have that close above tonight, it will have to be a very strong close. Do we have that? Catalyst, I think we might actually have that catalyst, but again, look, I gave you a little bit of an insider info that what we're looking at is actually the healthcare payroll number. the healthcare payroll number is actually really good. Why are we looking at the healthcare payroll number? Because if healthcare drops down, then we know the U.S. economy is actually, the U.S. labor market is actually going to be in real danger. Because if you cut out all the migration labor, a lot of Americans are actually in the healthcare industry, right? So that's why we're looking at the healthcare payroll. Okay, so Euro USD pretty stable, 1.1750, still going to be a resistance. We're not looking at any further progress on this one here. But I think we have a lot more room to go. And in all honesty with you, stochastic is good. RSI is way up. I have zero problem with the Euro USD here. And if we take a look at the sterling, and we'll take a look at the sterling yen, obviously, right? Sterling last Monday, I said, look, if sterling just stays flat inside that range, that 1.35, it will eventually get pushed beyond the Ichimoku cloud, and I think we are looking at that scenario at this point in time. The positioning on the sterling here, this is on the daily time frame, it's already shifting above the weekly pivot at this point in time. And if we take a look at the sterling here and why, this is actually pretty good because we thought we nearly had a little bit of a meltdown on the bond market on Tuesday, but we didn't. I mean, the market kind of pulled back on that. So obviously, bond traders kind of just hold back, didn't really crash the market or anything like that. But sterling here on the 15-minute time frame, it does has room or potential to go up. On the hourly time frame, this is already pushing higher. I think this is already beyond 78.6%, I believe. Yep, we are beyond 78.6. Next resistance up is going to be at 1.3550, but I think this can actually reach 1.36 on the sterling. So the positions that we have here, let's adjust this with the sterling. I want to go, I think we got filled pretty badly on this one here, but 1.3550, 1.36, it's kind of the target level that we have here. I wouldn't place my stop loss all the way down here because then it just doesn't make sense. Would I let it fade? I would let it fade, but really I wouldn't place my stop loss any lower than 1.3475. So I'm okay with 1.3475, but any lower than that, it just doesn't make sense in terms of stop loss placement. And for the euro target level, we need to break 1.1750. I can't really target anything any higher than 1.18. And again, for stop loss, even right now at this point in time, the only place I can have my stop loss is not even this low, because if I place it there, if we take a look at it on the early time frame, we're barely there on the 1-to-1. This is actually a very risky move here. So I don't want to see this one fade back inside the range before the breakout. Therefore, in terms of my stop loss, the lowest I would go is going to be at 1.17, and that's it. This would make it a 1-to-2 risk reward ratio. I would accept this a lot more than what we currently have. Would it be a big impact, the number of outcome outside of prediction, the prediction? Well, what number of outcome, what do you mean? Albert, I'm not quite clear on this one here. Well, Faisal, I'm more than happy to talk about this, but yeah, I mean, you shouldn't be opening a position like that and then asking me, well, where's my exit? Because you should have figured that out before you open a position. It's really trading 101. If you're new to trading, then I think it's actually good to understand risk management first, because it seems like you're trading without an idea of the potential exit. This could actually ruin you. Not just your trading, it would actually ruin you mentally as a trader as well. So just keep that in mind. Okay, market is not going anywhere in all honesty with you at this point in time. Let's take a look at dollar yen. Would I be touching dollar yen at this point in time? Probably not yet. There was a request for sterling yen. So let's take a look at sterling yen and see what we can do with the sterling yen here. NFE number far beyond forecast number. Would it be, I still don't understand your question here. NFE number far beyond. Okay, previous small was 79,000. It was revised up. We got 22,000. It is actually below, not beyond. All right, sterling yen, I will not be taking a long position on the sterling yen. I'm probably looking more on a potential short on sterling. Take a look at the hourly time frame here. If we have the last trend line, I think this is about to break down. You got about 15 minutes to make sure this is going to close below that support trend line that we have here. On a 15-minute time frame, this is still holding on. You can see what's going on here. If I were to zoom in on the 15-minute time frame, it's not really breaking down below it. So it's 42 minutes in the hour, right? If in the next 2 minutes it doesn't close below that, you have to wait 50 minutes more and make sure I actually close below it. If we have this resistance support trend line here, it doesn't break, then we can't short it. Would I be buying? Probably not. Do we have a little bit of a potential support building up? Yes, but this is more noticeable probably on a 15-minute time frame. If you take a look at it on a small scale, you might be looking at that and say, all right, this is a potential support. But if I were to zoom out and show you the hourly time frame, this is just a small cluster where we actually bounce off the support trend line. Is it significant enough for me to buy? No. Okay, so be very careful with this one here, especially if we have that continued weaker US dollar. That would actually push the dollar yen down. And yeah, it will drag the euro yen as well as the sterling yen, unless we have a huge jump that I'm not seeing on the euro USD and the sterling. At least not at this point in time, right? Sterling yen is actually not a bad trade if you want to trade it, but make sure it actually closes below the support trend line, at least on a 15-minute time frame. Ideally I would wait for the hourly candle to actually close, and even better if it actually closes below the Ichimoku cloud. But right now, if I see that bounce right now, it's a tough buy. Am I leaning for a sell? I would say so. Because if we take a look at the potential of what we have here, we actually have the RSI breaking below 40. That would be sign number one. And if we take a look at the stochastics, it is about to cross down. Okay. So higher probability for a short if it closes below the support trend line. And a specific number that we are looking at here on this 15-minute time frame, I would be looking at 199. Okay, so if it breaks below 199, then yeah, it would actually be below the Ichimoku cloud. I would go short, have my stop loss here. That's going to be about 75 pips. So again, this is not going to be for everyone. Your first target is going to be at about 71 pips. It's nearly 1-to-1. Right? But I can go lower on this one here. I would go at 198. 198 is much more significant. If we highlight 198 and we go all the way back, that's where price bounces off, not once, but twice. Okay? So I would go 198. Risk reward ratio initially is not going to be that great because we are looking at that fall here. Can we look at a much better positioning on this one here? Unfortunately, no. We need that break below 199. If we have that break below 199, I'll take 100 pip potential for 75 pips initial risk. But once we gain 20, 30 pips, I would move my stop loss to break even, let it run. I don't really want to place the stop loss like this close to 200 over the weekend. Definitely not going to be doing that. Okay? All right. Cool, we got our position set up, our stop loss are taken care of, not really too concerned, numbers are pretty clear. Stop loss here on the euro, again, that's going to be at 1.17 max. Target level, it's going to be at 1.18 max, right? We got failed pretty much at 1.1740, about 40 pips of risk. Sterling, our stop loss, it's going to be 1.3475. Our take profit level is going to be at 1.36 at this point in time. This is non-negotiable. This is a 1-to-1 risk reward ratio. Now, question is, can we trade gold? No, because gold does not break out of the range that we have established here. Therefore, this is not really a buy for me unless it actually closes above that level. But as I said, because of that healthcare number being extremely positive compared to last month, you might see that neutralize a lot of the potential weakness from this weak NFP numbers. Okay. Aussie USD, New Zealand USD, we stayed away from this. It's not going anywhere. Dollar CAD, dollar Swiss, a lot of whipsaws, but dollar Swiss right now is not even breaking any lower than the low that we have on Monday. Okay, so let's go back to the slides here. You know, going back to this, I think we had a good example here. I'm very particular, right? I'm not just some random educator, if you are wondering. This is my career as a coach. It is actually my career as a trader. It is also my career that I understand a lot of clients because I coach them and I work in the industry. I don't really want to mislead you or anything like that, but if you come in thinking trading is easy and you're not prepared with your stop losses, you don't even care about your risk management, that means you're not respecting yourself. So you got to think about it that way. Okay, so I might sound stern, but this is a huge no-no. Trading to me is not gambling. It's not really like playing a game or anything like that. I make money out of this. You know, a lot of people make a living out of this. So don't treat this as likely as that. It is actually very dangerous if you do that. I just talked to you about gold just now. I said, no, there's no opportunity in that. All right. Okay, so we already did the fade. I don't think we can actually fade anything. Post NFP positioning that we have, we already adjusted what we have. But again, regardless of the strategy you choose, you got to keep the following tips in mind. You have to manage your risk. And we already have an example here tonight that someone is already trading without even thinking about the risks that could actually be involved. So you have to always use appropriate stop loss. In terms of placement, you have to know where to place that stop loss. If you don't know how to figure this out, if you don't know how to plan your exit, instead of figuring out, oh, I learned this strategy, I learned that strategy, maybe understand how to actually find out your exit levels first and how important it is before you figure out your entry, okay? Again, never risk more than a small percentage of your trading capital on a single trade. Just keep that in mind. Stay informed, keep track of economic news, forecasts, market sentiment leading up to the NFP release, make better informed trading decisions. Obviously, we already informed you about the potential post-NFP sentiment, right? Let's talk about gold later on, okay? Let me just explain this first. So be very flexible, be prepared to adapt your strategy based on the actual NFP data and the market reactions to it, okay? So, Faisal was asking, about gold. I don't know where you're pulling that number 3520. Can you give me an explanation why you get that, where you get that 3520? At least give me one reasoning. Okay? I'm really here to help you guys. So please make me happy. Why are you selling at 3520? What makes you want to sell at 3520? Thanks, Daniel. Really. 2020, it's been a crazy 5 years. It has been 5 years. Aim for dollar yen right now is waiting for the hourly candle to close. Then if a new 50 minutes candle closes bearish, I can set stop loss above its wick and go on a short. Not a bad strategy. I'll be honest with you, I don't think that's actually a really bad strategy. But the problem that we have here, if we take a look at it on the hourly time frame, right? If we wait on the hourly time frame to close, then if a new 50 minutes candle closed bearish, I can set your stop loss above its wick and then go on a short. I understand it. Let's do a ghost on this. I don't know if we can. Is it here? Yeah, it's here. Let's do a ghost fit on this one here, just in case, right? So what I'm saying, I'm thinking is, if you look at it on the hourly time frame, which is going to close in about 9 minutes time, right? If it closes like that, and the next 50 minutes candle closes negative, it's a sound strategy, because I would assume then you'll be looking at maybe something like this. and then you wait for the 15 minutes candle to use that, right? To short it, right? Is that, I think that's what it is. Is it a sound strategy? Yes, I think it's a very strong sound strategy, because then you'll be looking at this scenario here, correct? You'll be looking at something like that. So you might actually get an entry here. If your plan is to trade intraday with minimum risk, I would be more than okay. But if we take a look at this and your stop loss placement on the 50-minute time frame, don't place it so close that it's 12 pips, you know, because if you round it up, the closest one is going to be that psychological 147.50. Very important. So you really want to push it at least 147.60, and then you can target whatever you want down there. The only reason why I don't really go too far any further than 146.75, you have to look at this cluster here as our potential support on the Dow Japanese yen tonight. Okay, gold is a very high uptrend. You can't short it, but when it will retrace a bit, we can buy it. I like that question a lot more than asking 35.20 sell, right? And I'll explain. I think there's actually a lot more going on with gold in terms of the fundamentals and the potential for that safe haven run. Okay, but Dow Yen, explaining Dow Yen here to Lune. Yeah, yep, that's what you're talking about. General trade, tight stop loss, slow days. I'm okay. You got this plan out. If you take a look at the scenarios here, even going for that potential support block on the Dow Japanese yen, it's a reasonable 1 to 2, at least 1 to 1.5 risk reward ratio. I would go for it. It's a 25 pips trade risk. Go for it, right? We might actually get a better price again. If we, depending on how that 15-minute closes, we might actually get it there. But if the 15 minutes closes like that and your risk reward ratio is not 1 to 1, skip it. It's not worth it. Okay. So just keep that in mind. All right. Let's take a look at gold. And very particular with gold here, I really do not want to go against the current move on gold. What happened here is that if I switch on the weekly, and the weekly closes like this, we would have broken and we would actually have started a new leg up on the weekly time frame. Stochastic is up, RSI is up and has been up on the weeklies. On the daily itself, all right, so let's go into the daily, let's double check everything. The RSI is also pushing up. Now the stochastics might retrace, it might not, it might stay above 80 for a long period of time. So for gold, where is the pullback that we should be anticipating? Now, this is where it gets a little bit tricky. If you take a look at the gold prices here, that's on a 15-minute time frame. I want to bring it down to the hourly time frame, just to give you a little bit of a perspective. The Ichimoku cloud is actually going to be very thin starting on Monday. On Monday, it's actually going to be very thin. What we have here in terms of the move up, I would expect a little bit more of a profit taking happening once it hits 3,600. Does it have enough fuel to hit 3,600? That would be the question. I don't think so. I don't think we have enough to hit 3,600 tonight. I think that would actually be reserved for the CPI numbers. So let's wait for a pullback. At what level do we wait for that pullback? That would be the question, right? It's not really showing any indication of any pullback or any initiation of any pullback at this point in time. In fact, for all I care, it might actually attempt to hit 3,600 tonight. So if you feel that you missed the train and price is very close to 3,600, do not jump in. It's only 20 bucks, okay? You're gonna see another liquidation happening at 3,600, exactly as what I mentioned last Monday on the Outlook, 2 weeks ago, right? Hit 3,500, you're gonna be looking at a liquidation happening at 3,500 before we actually see that pullback happen. Now, that liquidation that happened on 3,500 when it hits 33,500 level, the pullback was actually pretty short. In fact, we actually didn't see a significant pullback to test support at 3,500. So I'm not that crazy to say, oh, dude, this one here has to pull back $100. I think that doesn't make sense. But ideally, if I can see a pullback inside this area here, any pullback inside that area there, that would put it at about 35.50 as the main level to watch out for. If I can go close to 35.50, so anywhere between 35.60 to 35.40, I would consider placing a little bit of a trade, right? But not the whole thing. I will see what happens. If it bounces off, great. At least, we're still in that trade. But if it dips down lower, I would scale in at 35.25 and 3500. Those are going to be your two levels to scale back into gold. But yeah, do I expect like a significant crash in gold? From a technical perspective, there's no reason for me to anticipate that. We finally broke out of this range here on the daily time frame that we have been waiting for months. That's reason number one. Number two, the stupidity that Trump has done in terms of what he's trying to achieve with his tariff, which is now counted as illegal. What he's trying to do to influence the Fed, that is actually very dangerous. These are going to be the potential points that could push gold up, where people are going to be looking for safe haven. There is one more reason. This is something we posted on the Telegram or on the Octa space. If you're the English audience, on your app, on Octa space, you should be seeing my post, right? This should be up there where we talk about the bond paradox. This is actually another reason that gold, in terms of safe haven, could actually function here if the bond market crashes or if there's a meltdown in the bond market. Support level on the IEM would be a really good fade buying point if it holds, since price has been bouncing off it for like a month, I believe. Yes, I completely agree with that. I would completely agree with that. It has been bouncing off a month, I think more than a month. Well, I mean, August, it actually dipped a little bit lower on August, but I would say, yeah, it has been a level where price has been bouncing off. And I think this level here should be reflected. I think that's about 147, right? It should be reflected on the, yeah, well, it is. It is a good buying. We're still above the Ichimoku Club. We're still above that support trend line. Good plan. Good plan. All right. On Euro, could it be a bullish flag on weekly time frame right now? Maybe this is the last one. Yeah, we'll take a look at this as the last one. Time frame on a weekly time frame. Could it be a bullish flag? No. Unfortunately, no. Because we had that swing in April, this would have negated the flag. This is not enough of a flagpole, right? If it's all the way down there, I would say yes. But right now, this one here is not really a flagpole that we can say as a flag, because on 21st of July, the correction hits more than 50%. But yeah, it's not. Okay? All right. Start stop loss 147.40 with the hourly close, since that was a previous resistance level that got broken out of. Yep, I'll be more than happy. I think your plan sounds right on the dollar Japanese yen. 147.40 as your stop loss for short. All right, 147.40. Yeah, sounds about right. I would go a little bit higher, just in case. But it's completely up to you. You guys want to risk it 10? You want to risk it 25? I like to always give the market some breathing space. All right. Okay. This is the code again. It's Nonfarm 2025. Feel free to use the code. It's valid until the 31st of December 2025. Next session that we have here is going to be on theory and practice. That's actually going to be on Tuesday. That's going to be on the 9th of September 2025. That's next Tuesday, same time, same place. So yeah, any questions? you want to ask anything about niche trading theories, even though we don't cover that, feel free to jump in, and more than happy to discuss that with you on that theory session there. Again, that's going to be on the 9th. That's going to be on a Tuesday. It's probably a good time to, to jump in. I might give you some tips, ahead of that CPI trades on Thursday next week. All right, guys. Have a fantastic weekend ahead. Stay safe, trade safe. Again, this is Friday. A lot of things can happen. Good luck with your trades.